You're listening to AI Prism from Seoul Economic Daily.
It's Thursday, May 14. I'd like to share some thoughts about markets daily. Imagine driving a winding mountain pass with the gas pedal completely floored. That's, well, exactly what the Korean stock market looks like today. We're diving into some recent reporting from the Seoul Economic Daily to answer a pretty massive question. Are Korean retail investors acting as the market's ultimate shock absorbers? Or are they, driving it right off a cliff?
Yeah, it's a critical question for you to consider, right? Especially given today's historic milestone. I mean, the KOSPI, which is Korea's benchmark, basically they're equivalent to the S&P 500. It just shattered records, closed at an all-time high of 7,844. But the underlying mechanics of how we got there, it's a massive structural tug of war.
A tug of war is putting it mildly.
Right, because you have foreign investors just running for the exits, while domestic retail investors are charging aggressively in the exact opposite direction.
Right, and to put some numbers to that charge, foreign investors net sold for a fifth straight session. They dumped 3.76 trillion won, which is roughly 2.7 billion US dollars. Yet retail caught the falling knife, pouring in 1.88 trillion won, or about $1.3 billion. And this isn't just cash we're talking about, right?
No, definitely not.
It's heavily fueled by Bit2, which is the Korean term for leveraged retail margin trading.
Exactly. And that margin balance, it just hit 36.27 trillion won. That's $25.9 billion. And they still have another 137.4 trillion won, or $98 billion, just parked in brokerage accounts waiting to be deployed.
Oh, wow. 98 billion just parked.
Yeah. Morgan Stanley is looking at all this leverage and hedging with this really wide target range for the KOSPI of 6,500 to 9,500.
That is a massive spread.
It is. But the retail momentum is undeniable. It's creating anomalies like the explosion of these emperor stocks.
Right, the emperor stocks. Those are shares priced over 1 million won, so about $714 a share, right?
Like
a year ago, there was literally one of them, and today, record 11.
Yeah, 11. But, that massive retail fire hose, it isn't spreading evenly across the market.
No, it's laser focused on semiconductors, and it's actually triggering a historic valuation flip. I mean, you'd think Samsung Electronics' sheer size would protect its valuation crown. They have a 252 trillion won, or $180 billion lead in total market cap over SK Hynix.
Yeah, but despite that gap, SK Hynix just overtook them on the 2026 forward price-to-earnings ratio for the first time ever.
First time in history. They hit 6.79x versus Samsung's 6.77x. That has to be driven entirely by the AI premium, right?
It absolutely is. It comes down to HBM, or high bandwidth memory. This specialized chip architecture is basically the critical requirement for AI server buildouts, and SK Hynix currently dominates that space.
So markets are pricing in the future, and right now the future is HBM.
Exactly.
Plus, Samsung is staring down a major operational threat. They face a union strike starting May 21st. JP Morgan actually warned that the disruption could slash Samsung's operating profits by like 7 to 12%.
Right. And here is where we connect this targeted tech frenzy to the broader market infrastructure. Because if you're managing or watching an ETF portfolio right now, you need to understand that this concentrated capital flood is, it's actually breaking the system behind the scenes.
The numbers here are just absurd to me. Korea's ETF market has ballooned to nearly 466.1 trillion won.
It's massive.
That's $333 billion. But the Korea Exchange has exactly 5 review staff members managing the approvals for this entire $333 billion market. 5 people.
Yeah, and with an average tenure of just 2.3 years, which creates what industry insiders are calling a staff lottery.
A staff lottery.
Right. Depending on whose desk your file lands on, a new fund could face a 2 to 4 week delay. And we need to look at why that matters. In the ETF space, if you aren't the first to launch a specific thematic product, a competitor captures all the initial retail liquidity.
So a month-long delay doesn't just postpone your launch.
No, it basically hands your market share to whoever won the staff lottery before you.
And that overburdened review desk is about to get slammed with even more complex products to vet. Like in June, Kiwoom Asset Management is launching Korea's first active covered call ETF, specifically for the KOSDAQ.
Right, the KOSDAQ being Korea's tech-heavy equivalent to the NASDAQ.
Exactly. And a covered call strategy, for those tracking, traditionally involves holding stocks and selling upside call options for steady premium income. But applying this actively to the KOSDAQ is a very targeted play.
Very targeted. Because the KOSDAQ is inherently volatile, those call option premiums are incredibly rich right now. So Kiwoom is launching this specifically to harvest that massive volatility premium.
It really shows how the market is evolving to capture yield out of all this retail leverage we've been tracking today. The infrastructure is straining, but the strategies are adapting fast.
They are. It's a fascinating dynamic for you to watch as this ecosystem evolves.
Absolutely. And it all rests on these foundational shifts in tech leadership we talked about. So, a critical question for you to ponder before we wrap up. If Samsung manages to quickly resolve this upcoming union strike, will that historical valuation gap snap right back to normal?
Or, has SK Hynix permanently crowned itself the new king of Korean tech? It's definitely something to watch.
That's today's AI Prism, Markets Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.